FinTech as a whole has grown exponentially over the last decade just because of technological leaps. I would say more than financial product creativity. The data that's available today at the click of a finger is incomparable to what was available a decade ago. Ability to underwrite, ability to understand data points, ability to ingest, all that kind of stuff. So really, technology is taking a big leap, and I feel like FinTech has just gone with it.
Hi, everyone. I'm Ashoka Maimona. I'm the host of today's interview on behalf of Smarter Loans. Our guest today is Avi Bernstein, the CEO of 2M7 Financial Solutions, a Canadian merchant cash advance company. Hi, Avi. How are you?
Hey, I'm good. How are you?
Good. We're excited to have you here today, Avi. I'm sure our viewers are going to learn some handy practical tips from you and advice about merchant cash advances and a bit more about the alternative financing industry in general. So let's get right to it. I would like to start with you, Avi, and your professional and entrepreneurial journey. I think that would be really enlightening for our viewers to know how you got to this point, how you got into business financing, and how you came about creating and now leading 2M7.
Well, first of all, thank you for having me. Very excited to be here, and I hope I can share some useful information with everybody. So started off in the payment space, actually, in merchant processing, and we were selling to all sorts of small businesses and providing merchant processing services to businesses across the country. And there was a recurring theme we kept seeing with clients was that we saw they had all this revenue, but they couldn't really access credit. They were having a very hard time accessing credit or, monetizing the asset they created, the asset being a business that generates cash flow. And banks really don't fund based on that. I mean, we're hearing a lot of frustration from clients just from the processing world, from really talking with our clients in terms of their payment requirements and understanding their pain points. And one of the issues that just came up again and again and again was credit. And so we just kind of figured that was a niche that we would have to fill. And really, the market was kind of wide open. So effectively, that's what a merchant cash advance is monetizing the asset that you have, which is your cash flow and your expected future cash flow, and to access that as cash today. So you can really access the money that you're expecting to have today in order to use that to generate a bigger cash flow down the line, to generate additional revenue, generate additional sales, capitalize on opportunities, etc., without going the traditional loan route. So that's effectively what a merchant cash advance is. And that's really, kind of the opportunity we saw that all these businesses that either weren't eligible for a bank loan or just didn't have time and energy to deal with the process of getting a bank loan, didn't have sufficient collateral. And this was really a problem a lot of these clients were facing. And we heard their pain points and kind of moved into providing merchant cash advance and just kind of grew it out from there.
No, that's really helpful. And I think it would be more helpful, Avi, if you could paint a picture, especially for viewers who are unaware of the different types of business financing out there.
Mm-hmm.
So in terms of the alternative financing industry in Canada, I mean, it's been around for more than a decade, but I think a lot of pundits would say that Canadians have been somewhat slow to come out of the gate in adopting or even learning about alternative financing because perhaps of reticence based on reliance on the traditional financial institution. So if you could paint a picture of how the alternative financing market has shifted in the last decade. And I know that 2M7's been around for a number of years, but you really pivoted in 2016 and took advantage of how the market was shifting. So if you could speak to that and how merchant cash advances fit into this market with the other options available as well.
So I would say a decade ago, there was basically FinTech as a whole has grown exponentially over the last decade just because of technological leaps. I would say more than financial product creativity. The data that's available today at the click of a finger is incomparable to what was available a decade ago. Ability to underwrite, ability to understand data points, ability to ingest, all that kind of stuff. So really, technology is taking a big leap, and I feel like FinTech has just gone with it. Now, Canada has been a little bit slower than other countries to really get into the whole FinTech game, if you will. But I don't think they've been too much slower. The adoption curve, I would say, is maybe 2-3 years behind the US. I mean, not a decade behind the US. So we're getting there. We also have a very different landscape. Now, I just keep saying the US just because that's A, the biggest market, and B, it's our immediate neighbor. In that the US, they have a much bigger selection of banks, and all the banks have different criteria. So there are bank financing options in the States that don't exist in Canada. So Canadians really had a pretty limited options on how to finance a business. It was either go to a bank, go to your rich uncle, or just bootstrap it from the ground up. There wasn't a lot of ways to finance a growing business until, more recently. I mean, even PO financing got more popular. But yeah, merchant cash advance, I guess, really took off along with all of that. Again, I feel more Canadians learned about it. Also, the technology has really pushed the product forward, making it very useful for a lot of businesses in terms of being able to get the money the same day you apply. That's kind of unheard of in most products or in most financial products when you apply for money to get it the same day. A merchant cash advance is generally able to provide that. Again, a lot of it comes down to technology, but also to adoption, right? There's also the adoption curve, so it's been around for a long time. But the industry as a whole in Canada, I would estimate, is growing pretty significantly. And that's, again, as more businesses learn about alternative financing programs, more businesses are signing up. I know Smarter Loans does all these, surveys on more and more Canadians, both in personal finance and in commercial finance, are getting more and more comfortable looking for alternative options other than the traditional old way of financing a business. So really, I think the adoption has grown as well. The product itself has been getting better over time.
Mm-hmm. No, definitely. And I remember the last time we spoke, Avi, something that really resonated with me when we were talking about 2M7's goal and mantra is that you're motivated to fund as many deals possible. Why do you think that's important?
So again, in Canada, we have the banking kind of system, and you either fit in their system or you don't. And for businesses that don't, at least until recently, really didn't have any other options. It was like almost up to the banks of, who succeeds and who grows. And a lot of businesses were just stuck and they didn't have an option. So our goal in really starting was helping the businesses that don't necessarily fit the traditional banking model, that don't have the traditional collateral. They don't own a property, or they don't have 3 years of audited financials or whatever it is, but they're still running a good business. They're still profitable. They're growing. They have good cash flow, and they don't necessarily get venture capital or whatever. It's more of a traditional kind of business. There wasn't a lot of options. So we really wanted to be that option for them. We really wanted to be there for every Canadian entrepreneur. Anybody that's running their own business, it means they took a risk. They put it all on the line. They're invested financially. They invested their times. Generally, their livelihood, their family, everybody, they're generally all in. And if they're looking for financing, they usually know why they need it. They know they can use it properly. They know they can use it to fix and grow their business. They're all in. We're just there to help them go. Really, they deserve a chance. They're the backbone of the Canadian economy, and they need that financing to really get there and make that happen. And that's really been our goal since day one, is to really approve anybody that can possibly be approved.
That's excellent. And I know reading your website and from our earlier chat as well, that 2M7 has a proprietary system to evaluate risk and also determine credit worthiness. If you don't mind speaking a little bit to that and how that's different from mainstream funding sources.
And this comes down to, well, a little bit of it is the difference between a cash advance and a traditional loan, right? So cash advance is more looking at the future revenue expectation of the business versus a loan, which is usually looking at the balance sheet. It's usually looking at the profit margin, collateral, assets. It's a lot more of a asset heavy, if you will, and as opposed to a cash flow support. So, we look at all sorts of different data points. Obviously, their cash flow, their industry, there's, and then we get pretty granular. We look at zip code, but there's all sorts of variables that come into play. A lot of information we take off the bank statements, see how many NSFs a client has. We can see, how many deposits, how many withdrawals are done in a month, average size, variables between months. Like, there's so many data points that get collected, and they all get pulled together to create a credit worthiness score, if you will. And it'll generally be based just on the main points are the cash flow of the business, and if the business can support the payments and the cash flow. And also, it very much varies on industry as well, right? So, the trucking business, let's say, we know if we provide them enough money to buy an additional truck, their revenue is going to climb by X, and therefore they'll be able to make enough to cover payments of Y. It gets pretty granular once you break it down and try and really understand the pinpoint. But that's more on in terms of how much a business can get and how much they can afford to pay back, so we don't overwhelm a business with payments. They don't get stuck with payments they can't afford. So yeah, I mean, we look at as many data points as we can, and we're always, kind of filtering and tinkering with the system to try and make it better, to have a better grasp on creditworthiness of businesses, really without looking at traditional balance sheets and P&L and L and other requirements that traditional lenders would have.
Mm-hmm. No, this is very helpful, especially for business owners who are looking to obtain business financing, let's say specifically merchant cash advances, for them to know what they need to get qualified. So essentially, I know you have an online application, but if someone were to come to 2M7 to get qualified, what are some of the tangible things that they would need to show?
Generally, we just need a basic business profile. So if you have an online presence, we'll find that. And you can gain a lot of information from there. So what they would provide generally is just bank statements, proof of ownership, piece of ID for the owner, and we're pretty much good to go. Maybe a business reference if required. And then the rest of the data we can pull together generally by ourselves, right? So again, depending on the industry, depending on how well positioned that business is on their online presence, how much information is available about them publicly, we build a pretty good profile pretty quickly. And again, to circle back to the tech, once we have a couple basic pieces of information, we can really build a profile on an individual, on a business, and really understand it pretty quickly, especially once we combine it with all the data that we've already collected on businesses in their area, on businesses in their industry, on businesses with a similar profile.
That's very helpful. Thanks, Avi. Now, to move from the granular to more of the big picture, I mean, you're immersed in the scene. What would you say is the state of the alternative financing industry at the moment as we stand? I mean, if you want to specify the merchant cash advance scene, but also go beyond that in the fintech scene, in terms of not just how players in the scene are faring, but perhaps trends, innovations, challenges that you and your counterparts are facing or your clients are facing?
Interesting question. Yeah, so obviously the beginning of COVID was much more challenging. Most of us have found our, kind of cut our footing. As long as most businesses in Canada, I feel like the Canadian government did a decent job in supporting small businesses, at least in the beginning, and they kind of did some good bailout packages to get most businesses to get through the worst of it. And now a lot of Canadian entrepreneurs really figured out how to survive and pivot and really make it through the next stages. So we're going to see, I think, we're going to see a big, big shift in how business is done in all businesses, obviously ranging from restaurants to gyms to construction to really anything. All businesses are changing how they operate and changing their model, and we obviously have to change with that. And again, when businesses are shifting and things are changing, businesses generally are going to need money to kind of pay for that shift and carry them over and deal with any cash flow issues or growth that's occurring. As well, banks tend to be much, much slower in changing than other businesses. So the businesses are going to be way ahead of the curve from the bank. And at the same time, while businesses are shifting, entrepreneurs are always or generally more open to new ideas, new options of financing. I mean, we've already seen some growth, some pretty significant growth in the last couple of months as the business landscape shifts, as the financing landscape shifts. And I think we're just going to see that grow. And I think we're going to see some really big things coming in 2021, 2022, maybe even stretch to 2023 as everybody gets comfortable with the new reality, businesses get comfortable with the new reality, spending goes back up, business growth starts to really come back with a roar as vaccinations roll out. Hopefully, provinces are going to be reopening more. And I think we're going to see an explosion of growth across the economy and in the small business sector, probably even more so as we see more and more innovation coming out of Canada and more entrepreneurs, taking the leap and really going forward and growing their business. And I think all forms of financing need to be there to support that growth. And as an alternative financing company, especially for small businesses, I feel like we're going to be at the head of that curve. And then slowly all the other forms of financing catch up until eventually the banks make it there. But that's just my guesstimate or guess prediction, call it what you will, of what's going to happen in the next few months or years. And that's really kind of how we're gearing up and trying to be set up and ready for that shift as it occurs.
Mm-hmm. And I would have to echo, I definitely share your optimism, Avi, about, the coming months and the coming year. And the reason I framed the question in terms of challenges and innovation is because I truly believe that out of challenges, we do get innovation and we do see new, perhaps reformed ways of doing business. On the ground, I know the last time we spoke, you said that you foresee a renewed demand for capital. Is that something you're starting to see on the ground? Are you seeing small business owners starting to pivot or starting to realize that in order to really maximize, get the most out of their business, not simply because of COVID's pressures, but because of pressures of change in terms of consumers and other types of trends having an impact on the market? Are you seeing those type of trends play out as well?
Yeah, we are seeing quite a bit slower than I initially imagined. But again, the vaccine rollout is also a little slower than we initially imagined. And now we're in our third lockdown here in Ontario, which obviously is not great for anybody. I don't want to take away from any businesses that are suffering because there's a big sector in the economy that is hurting and that's going to be hurting for the foreseeable future. Everybody's doing what they have to survive and everyone's doing what they have to grow and to keep their business alive. And it is a real struggle for a lot of businesses. I don't want to take away from that. But at the same time, yeah, I do think there's going to be a lot of optimism. I do see an uptick in growth in some industries, and some industries are just lagging, but I guess that's expected. Overall, we are seeing a bigger demand for capital. We are seeing a lot of growth. And I guess the Canadian economy as a whole and small businesses and their funders as well are generally speaking in a better position than we could have been or than a lot of us predicted we would be last year. Again, a lot of that has to do with government support. Consumers, a lot of us, all decided we're going to shop locally. We decided we're going to support the small businesses that are around us. That's who we want to do business with. And that's how we showed our support. And that really helped a lot of small businesses survive and thrive. So there's been a lot of that. There's been some government support and there's been, the ingenuity and creativity of the Canadian entrepreneurial community of people just really figuring it out and pushing forward and growing their businesses, even though we're in a very weird time and trying to really figure out what the new normal is and what the future looks like.
No, definitely. In terms of business owners, small, medium-sized enterprises who are looking to obtain business financing, what are some challenges that you on your end have noticed that they, encounter, and what are your tips in terms of overcoming some of those challenges?
Interesting. Okay, so there's a few challenges. Again, it depends a lot on where in the business cycle the given business is, right? Some are going to be more mature businesses and they're looking for growth. Some are more in a startup phase. I would say anybody that has a long-standing relationship with their bank, you're in business for 3 to 5 years or more, really work on that relationship, build up credit. It might take time. Banks don't like going too big, start off, get a business credit card, just start building that business, that relationship with your bank. They say the best time to raise capital is when you don't need it. So really, business owners should be thinking about that, about capital. One of our big selling points is same day funding, but that usually is, you should probably have some funding lined up or at least a relationship. And if it's not with a bank, it can be with a funder, it can be with someone like us. You know what I mean? We have businesses that we started off with when they were startups and they were just getting going, and you might have funded them $5,000 or $7,000 in the beginning. And today we're financing them a couple $100,000 a month or, every few months. And that's because the business relationship grew, right? As they grew, we grew with them. So that's something you want to know. Even if you don't plan on taking the money, maybe open a line of credit. But just focus on getting the credit up with various lenders or lending facilities or funders or however you see your business kind of moving forward in terms of the cash flow or cash requirement basis. Another thing, you want to have your documents in order. Make sure you're up to date on your taxes. Nobody wants to fund you if you have 3-year balance with the CRA. Make sure your paperwork is in order. You want to have your financials, your bank statements are nice and organized and clean. You have a signed lease with your landlord. It's not just a verbal agreement, although maybe if it's your buddy, but the more organized you are with the paperwork, and yeah, it's annoying and it's time consuming for an entrepreneur when all they really want to do is, focus on their business and get product and all this kind of stuff. But really, the boring stuff is what you really got to do if and when. That way, when it is time for financing, when you are ready to grow, when you are ready to get additional capital for your business, it's nice and easy. You don't want to start running around and getting all your documents done and get your accountant to start looking at your financials from 2016 because you haven't been on top of it. That's really what I would say is just really plan ahead. Make sure you have what lenders or funders or whatever route you plan on taking for your business, whatever's right for you. Make sure you're set up for it in advance. Make sure you know what they might need, and at the same time, make sure you're credit worthy and you've already started building that relationship with them. If you can, the earlier the better.
And Avi, to pivot back to merchant cash advances and to really highlight them as a form of business financing for your average person who perhaps is unaware of what a merchant cash advance is or what some of its pros are. I mean, you spoke about the readiness and how quickly one can access this type of financing, but what are some things that you would advise to small business owners looking for financing, specifically about merchant cash advances, why you would, gear them towards this type of financing, and what perhaps even people who have utilized merchant cash advances, what are some things that they should know to really maximize the value and the potential of this type of financing?
Sure. So again, it's a cash flow based financing, right? So it'll be based on your cash flow. So generally the best use of it is something that you expect will increase your cash flow. Let's just say a restaurant wants to build out a patio, right? So if that'll increase your seating capacity by 30%, then you can reasonably expect your revenue to climb by, let's just say 15 or 20 or 25%. If your repayment is 7% of your revenue, then it's gold, right? It's paying for itself, plus it gives you some extra cash flow. That would be the perfect time to get a merchant cash advance, maybe even better than a loan in that case, because a loan, then it's on your balance sheet and it sits there, and then you have to make the fixed payments, and you have to deal with accruing interest and all that kind of stuff. So with a merchant cash advance, you know the cost in advance, and you can really factor that into your cost of whatever project it is you're doing. That would be a very good use, is if you can really map out the expected value of whatever project it is. You just need money right away. So say a supplier calls you and they're liquidating their stock at 50% off. So obviously, if you can get the money to take advantage of that and buy your product for a 50% discount, obviously that would be a good idea to take. So these are the kind of, I like to call it opportunity financing. We have an opportunity or you have a growth opportunity, but it's also for emergencies, right? If you're running a pizza shop and your oven broke, you don't have a lot of options in terms of you got to get that oven up and running, and you got to get that up and running today. Otherwise, you're not going to be open tomorrow. You're going to need $5,000 to replace it. You better have an option of getting that $5,000. So that could be a very good kind of plug or bridge, if you will, where a cash advance can come in super handy. So there's 1,000 uses where it can be productive, again, depending on the industry you're in, depending on your use for it. But I would say in order to really maximize the value, make sure you have a plan for the money, know what you're doing with it, and really think through and map out what that money is going to do for your business and how it'll help your business generate additional revenue, or at least if it's to lower cost or fix an emergency or whatever it is. And just make sure you're comfortable with the payments, that it doesn't negatively affect the business long term, obviously.
No, that's very helpful, Abby. Thank you. I know we earlier spoke about both startups trying to launch a new business or established businesses that might be pivoting and switching gears. What sort of tips or tangible advice do you have to give to people in that sort of boat, young entrepreneurs who are starting out or business owners who've been in the scene who are trying to grow? What advice do you have, not simply from a financing perspective, but just as yourself being an entrepreneur? What are the opportunities that they need to capitalize on and grow? And what are some potential challenges they may not be aware of in the current climate or otherwise that you yourself have had to overcome?
That's a challenging one. I guess to a certain extent, that's industry specific, right? Like every industry is going to have its unique challenges, especially in this time. The obvious one would be, restaurants all shifted to takeout and home delivery I would say probably the most important things is number one, make sure you're using the most sophisticated technology you can for your business, whatever your business is. Like if it's a trucking business, make sure you got your GPSs and your routes and your staff managed and docs and like whatever the tech or cutting edge is in your industry, you want to make sure you have it or you're at least using it to the best that you're able and really be aware of what the technology is because that's really, it seriously can maximize efficiencies. You know what I mean? It's like today, if restaurants not doing delivery, they're way behind the eight ball, right? And there's a million ways to sign up to delivery today. You know, with the click of a button, a restaurant can sign up to Uber Eats or DoorDash or whatever it is. So that's something that obviously any restaurant would have to be taking advantage of today. And again, like I mentioned before, you want to have your documents in order. So when an opportunity does come, you're ready to go. You're ready to capitalize on it. That's something that I've seen too many times. You know, that people had an amazing opportunity, but they just weren't well capitalized enough, or they didn't have the ambition or excitement or whatever it is to really capitalize on the opportunity. And then it slipped away and that was it. So that's something you always want to be ready for. And again, that comes back to capital a lot because you need the money to take advantage of the opportunities, but you also need the willpower and you got to be open minded that when an opportunity comes, you know, to really take advantage of that. But again, that's pretty specific and it obviously needs to be something that plays to your strengths and something you think you can be very successful at, not just any opportunity. So I guess you would have to, that would be more business specific than general. But yeah, I guess that would be my 2 cents on it.
That's great advice, Avi, because as you said yourself before, that small businesses really are the backbone of our economy. And it's true. I mean, there has been a lot of innovation, but at the same time, as you mentioned, there have been a lot of challenges. And I mean, the CFIB has talked about, how the staggering numbers of small independent businesses who've had to, shut their doors or
Yeah.
really experience, a slowdown that's taken a toll on their lives and their livelihoods. So, what is your advice to the people that are struggling right now, and how to manage some of those stressors?
That's a tough one. Again, I would say you got to do what you can to survive. There is a light at the end of the tunnel. Like we're getting there. We're almost at the end of this. Anybody that can, just hang in there. Take advantage of the programs the government put forward because they did put forward some good programs. There's a lot of resources available to help people through this. Work with your lenders, work with your banks. A lot of them have programs to help small businesses. They're offering all sorts of refinancing options and stuff to kind of get you through this. Now, it is tough. A lot of businesses are struggling. A lot of businesses didn't make it, as you just mentioned. The reality is that there's a lot of pain on Main Street from COVID, and people are still staying home. A lot of people are not going out. And again, we're in a shutdown now. And this is really across the country. This is small businesses everywhere. I guess it would just be do what you can, work with your vendors, work with your lenders, the funders, whoever it is you work with. And really, a lot of businesses and vendors and everybody understands what you're going through, and everybody's in this together. And I know that's a cliche today, but I say that in the sense that a lot of vendors are really really open to working with their customers to help them succeed. A lot of people are working with their landlords to get rent relief or some sort of payment plan. So all these programs really take advantage of it as much as possible and hang in, innovate, do what you have to get some revenue, to get some customers through the door, to make some sales, at least until this is all over, a couple more months, I would say. I wouldn't say we'll go back to normal, but we'll settle into the new normal, whatever that looks like. We don't really know yet, but we're getting a pretty good idea at least.
No, definitely, I share every single one of your sentiments. In terms of yourself and 2M7, what's next for you?
So right now we're really gearing up, right? As I mentioned, we are very optimistic about the Canadian economy, about the Canadian small businesses, about the resurgence and how we really believe that we're on the cusp of major growth that's going to come to the Canadian economy, to Canadian small businesses. We already started seeing some innovation. I think it'll turn into a tidal wave of innovation of new businesses, of new and exciting things coming to Canada, to our technology, to our Main Street. We're seeing all sorts of exciting things. And I think it's going to continue. And again, I feel like COVID pushed us 5 years into the future in terms of everything from work from home to ordering out to how we expect to be treated by businesses as a consumer, businesses we interact with. It really changed us in a lot of ways. It changed business in a lot of ways. It changed the way business is done. I don't even know if meetings are going to be happening anymore. I don't know if anybody's got to get off their couch a lot of the time to really get work done. So really everything shifted, everything changed, and I think we're going to see a lot of new and exciting things. And we're really gearing up for some big growth to really help finance that wave of excitement and innovation and new businesses that are springing up. So that's really what we're doing. We're getting ready in areas of the business. We're getting more underwriting, more account reps. We're really getting ready to finance some big growth across the country.
Exactly. And in terms of viewers who want to learn more about 2M7 or your journey, where should they go?
Yeah, you can go to our website, 2m7.ca. Talks a little bit about us. You can call us. We're always ready to account reps. Here to help. If you have any other questions about the product, about who would get approved and when it would be useful, absolutely call in. And we're happy to help and happy to provide information and if it's the right product for you.
Excellent. Well, thank you again, Avi. It's been a pleasure chatting with you today.
Thank you so much. Thank you. Appreciate it.